Hey everyone, me Kevin here. We got to talk about Tesla. Why? Because, well, we have serious fears and concerns in the market that we have two major phases of market contraction. Phase number one is when we just see prices collapse because price to earnings ratios are collapsing. And that's okay. That's something healthy that happens. But phase two of a recession could be an earnings recession. And this is when we actually see consumer demand hurt to the point where people are spending less money on goods and services. As a result, companies show lower top-line revenue and lower net revenue. A simple example that I regularly like to use, of course this video is going to be about Tesla, but a simple example that I regularly like to use is if you look at the last Nike earnings, you see that we had tremendous growth during the pandemic, and not a surprise, people buying shoes, working out from home, whatever, getting workout clothing, you name it. But what do we have in the last earnings report? We have a year-over-year comparison of revenue that is down 1% and net earnings that's down 5% compared to last year. Now, if you have that for 2 quarters or more in a row, you tend to be in an earnings recession. And that oftentimes comes with big old analyst downgrades, and as EPS goes down at the same time as multiples went down in the first part of the market crash, well, what ends up happening? You end up getting lower growth expectations and lower premiums for stocks, which in English, stocks go down. It's not great. In a recession, stocks suffer a lot. Now, there are, however, some companies that potentially could survive an earnings recession. And one of those companies, in my opinion, is Tesla. And I'm going to explain briefly why I have that thesis in this video, along with some new information on Tesla. But first, I want to talk to you about this valuation argument, because every time I bring up Tesla as an investment, people say, oh my gosh, how could you invest in Tesla? It's so overvalued. And then I like to ask, would you invest in Apple, or would you invest in Microsoft right now? These are pretty big names. And most people who think that Tesla is overvalued respond to me and say, yeah, I mean, Apple and Microsoft, they're great companies. So one of my favorite metrics is the PEG ratio. And this is a ratio of how much money you're paying for growth. This is really important because rather than just looking at the share price of, let's say, $1,000 stock divided by their earnings of, say, $20, then you get a price to earnings ratio of 50. We're now going to take that 50 and actually compare it to the growth. And if earnings, let's say earnings are $1, are growing to $1.50 year over year, that's a 50% growth rate. Divide that 50 PE by the growth rate, what do you have? You have a PEG of 1. When we do this math with Tesla, we actually get a 2022 PEG ratio of 1.41 and a 2023 ratio of 1. Anything under 2 generally means you're getting a decent deal for growth. Anything under 1 is just absolutely phenomenal, or at 1 is even more phenomenal. Now, if you look at Apple, you have a PEG ratio of 3.8, and if you look at Microsoft, you're over 2. So when you look at a PEG ratio where you're actually taking the price to earnings ratio and you're dividing that by the growth of earnings, you actually have an extremely, in my opinion, well-valued company like Tesla. Of course, it creates risk factors. The biggest risk factor is, what if that growth slows down? Well, if growth slows down, then obviously the PEG ratio goes up. And that's one of the big themes, is what if growth slows down? And that's something that we got to talk about, because things are changing in China. Delivery rates are now down to 1 week in China. This is happening at the same time as Tesla Giga Shanghai is expanding substantially. In fact, we're now expecting 100,000 cars to be delivered out of Giga Shanghai. This is actually incredible because we've generally been delivering around 70,000 vehicles per quarter. And now, per month. Okay, this is a per month figure. We're going to go from in the 70,000s per month to 100,000 vehicles per month. This is phenomenal. But because of the pain the Chinese consumer is experiencing in China, Chinese consumers still saving substantially more. Remember, back in January, we were saying, wow, the Chinese consumer is saving 4 times as much money as they were last January. And we know the Chinese are very, very smart people, especially when it comes to savings and cash. What did you end up with? Well, basically, now a pretty bad recession, if not depression, in China. I don't really believe that their GDP is actually still going to be 3.5% this year. I think that's nonsense. I think they're negative, but we'll never hear that. But anyway, so obviously we've got lockdowns and consumer fear in China. But the big issue that we have with Tesla is, what if Tesla manufactures more vehicles but then doesn't have more buyers? And China is about to be our first test of that, because as we're expanding and we're seeing wait times go down, which unfortunately is something we saw happen at Peloton, right? Wait times came down, then prices came down, and then all of a sudden the stock fell 90%, right? That's scary. If your demand evaporates, you're screwed. Now, do we think that potentially could happen with Tesla? Well, of course that could potentially happen with Tesla. In fact, Tesla is reportedly giving insurance subsidies to get people to buy Teslas in China. Of course, they've got other competition like BYD and NIO over in China, but most of, in my opinion, the reason why we're seeing lower wait times in China is both a combination of the fact that we're producing way more cars, but also because, well, China's having a little bit of a depression, okay? All right, that's just between you and me, all right? I don't want the CCP coming after me. But anyway, the good news is the United States economy could potentially desire to absorb those Chinese-made vehicles. Now, a lot of Chinese-made vehicles used to be exported to Germany, but now we've got Berlin ramping up, and maybe we don't necessarily need as many of those vehicles going over to Europe because we've got Giga Berlin to provide local production. The big issue, in my opinion, will be is if Chinese vehicles or Chinese-made Teslas are sitting around waiting for buyers. That's going to lead to price drops. And we already know that China's production is the highest margin, but let's ship these cars instead of maybe to Europe or locally within China, get them to the United States and bring those wait times down. As we go through this recession, we expect both margin to go down and the amount of outstanding buyers available in the buyer pool to go down. We do hope that as wait times start approaching maybe 1 to 2 weeks, we hope that more buyers start coming to Tesla, which may not happen, right? That's a risk factor, but we hope that more buyers come to Tesla because a lot of people, when they want to buy a car, they don't want to wait 3 months or 6 months. In fact, if you look at wait times in America right now, if you want the long-range Model 3, it's not even available for sale because the wait times are so long that they have canceled people's ability to actually pre-order that vehicle in America. Not only that, but the Model 3 currently has a delivery expected time frame of October to December. That's at least 4 weeks, but potentially months. The Model Y, which in my opinion is the best value for a Tesla, has a delivery process or time frame of December to April. And again, I think that's the best value car. Now, you're still going to have people, though, that say, you know what, look, I just don't want to buy a car during a recession. Personally, I think that's smart. I mean, when I talk to people daily, when we do our fundamental analysis in the course member live streams, link down below, by the way, there's a coupon code SEED that expires soon this month, so make sure you get that before prices go up. But when we're in these fundamental live streams, people ask me like, hey, should I be buying a car right now? And I hate to say it, but no, you shouldn't be buying a car in this market, right? Now, I don't think I can single-handedly, hurt Tesla's market here. Obviously, I'm really heavily invested in Tesla, and while I am becoming a licensed financial advisor, I'm not your financial advisor, so I can't give you personal advice. I can't tell you what to do. But look, I'm heavy on Tesla because I think that we are going to have continued survival in earnings and continued demand. But I'm starting with the risk factor because if the demand wanes, we're going to see earnings go down and Tesla will end up just like Nike with negative growth. And if we end up having negative growth, that PEG ratio goes out the window and instead you have a company that actually is overvalued. So what are the odds of that? Well, in my opinion, fortunately, very, very low. And there are very simple reasons for that. First, shout out to Troy Teslike on Twitter for providing us some expectations. He's usually pretty dang accurate with his expectations. We believe that in Q3, Tesla will deliver 369,000 units. That is higher than the 310,000 units we had in January, and it's certainly higher than that summer slowdown we had of 254,000 when Shanghai was locked down. That is growth, folks. That's really, really good growth. In fact, that is about a 20% delivery growth in a quarter. That is third quarter compared to first quarter. But we expect to go all the way to 461,000 vehicles by Q4. That's 150,000 vehicles more. That's 50% more than in Q1. It's not even a year-over-year comparison. It's like a 3-quarter comparison, which is really, really incredible. So phenomenal growth rate on the actual deliveries. We got to keep those earnings high, though. When that unfortunately filters through margins, Unfortunately, though, Elon has been suggesting that we're starting to see commodity prices, which this is obvious. I mean, we know iron and copper and a lot of these commodity prices are plummeting. We know that because we can just look at them. But he's even been mentioning this on Twitter. So we could even see price drops at Tesla to remotivate demand, which would be very good while still maintaining margins. So there's definitely a buffer there, sort of somewhat of a margin of safety. But we are, and this is a little bit of a downside, for the first time in really certainly the last 2 years, which in my opinion really means ever, we are seeing Tesla's order backlog start to decline. Now, this is expected in a recession. Remember what I've always said. I've always said that in a recession, you would expect demand to just plummet like 30% for Teslas. But if outstanding demand is 35%, you could lose 30%, still maximize your production, and still grow earnings even through a recession. And unfortunately, I just don't think there are many companies that you can invest in during this particular recession we are going through, where you're actually going to see earnings keep going up, up, and up. In fact, the housing market is already turning. We know that. We talk about that in the Zero to Millionaire Real Estate Investing course. But not only is that already turning, we are seeing home good retailers, like furniture retailers and appliance retailers, according to the Wall Street Journal this morning, start laying people off because they see demand slowing because of slowing housing sales. This is exactly what you would expect when the housing market is slowing down. It's why I'm launching the startup HouseHack, which if you're an accredited investor, this is not a solicitation, but you can go to HouseHack.com to learn more about investing with me at HouseHack, and I'm working on the non-accredited version. So if you're non-accredited, don't worry, I'm still thinking of you. We'll also later today be doing a live stream for HouseHack. That'll be at 4 p.m., so stay tuned for that. But we are at about 102 days of production backlog for Tesla, and that's about 3 months, a little more than 3 months. I really believe, and that backlog will grow obviously as wait times shrink. I believe as long as we can keep an order backlog, doesn't have to be a big backlog, just a order backlog, as long as we can maintain one for at least the next year, I think Tesla is not going to end up being in an earnings recession like most companies, and people are actually going to end up looking at Tesla as a safety play because they're going to look and go, dang, Apple's in an earnings recession, Nike's in an earnings recession, what the heck? Tesla, one of the largest market cap companies in the market, could end up actually looking at it like a safety play. Imagine that, going from thinking that Tesla might be overvalued to a value play. Well, maybe I shouldn't say value, but I should say safer play. Hashtag no guarantees, because don't sue me, bro. Thanks for watching. Check out the coupon for building your wealth down below and househack.com. Thanks so much. Bye.